Hello, everybody. Can you hear me? I'm seeing some nods. Thanks, team. What's up, everybody? A lot of note takers on the scene.
Hello, Austin. Good
What's up,
afternoon,
Wheeler?
everybody.
How are you, buddy?
Good, thanks. How are you?
Awesome. I guess it's 2026, eh? People send their AI note takers to meetings instead now.
I I hope not for this, but yes, they do.
Yeah, I'm hoping this can be interactive and people can ask questions, jump in, chime in, share a little bit about what they're doing here, and can be a bit interactive. I guess we'll see, right, Steve?
Yeah, I mean, it's fine to have your note taker, but as long as you show up as well.
Yeah, it'd be awesome if you guys are there and you're able to share visual of yourself. That's great. If not, that's okay too. We'll deliver. I know some people message me saying that they won't be able to come, but they love the recording. So we are recording this, I think. Yeah, we are.
Perfect.
Steve, do you want to quickly introduce yourself and how you're gonna kind of help us through this first time home buyer situation?
Yeah, do you want to give it another minute or two? Is this everybody, do you think?
I see 12 participants. Um, I know that more than this signed up. I know some
Yeah.
can't come. I think we'll get intros out of the way and then we'll get right into it for those who have showed up.
Okay, perfect. Okay, well, thank you very much to everyone for being here today. I really appreciate you taking the time. And like Austin said, this is recorded, and a big thank you to you, Austin, for putting this presentation together and leading us through it. So I'll just be jumping in for the part of the financing, but a just quick introduction of who I am. So for those that I haven't met, my name is Steve. I'm a mortgage broker working across Ontario, helping clients with purchases, refinances, and renewals. And a big part of what I focus on is making sure that my clients are properly set up on the financing side before they go out and make an offer, because I find that's where I see a lot of the biggest mistakes happen. So also as a mortgage broker, I have access to over 50 lenders, the banks, credit unions, monolines, alternate lenders, and private lenders. So there's also a ton of programs as well to make your first purchase as well. And just last thing, another important detail I think I should mention, it doesn't cost you anything to use a mortgage broker like myself. Like, full transparency, I get paid by the bank and it's not on the rate, it's on the size of the mortgage. So as an ex-banker myself, I came from the bank, so I know how low the banks can go with the rates. So we make sure that we have my clients have the lowest rate possible.
Amazing. And at the end of this, we'll share your information so that people can follow you on socials where you're always given value and get in touch with you directly if they need anything.
Thank you.
Awesome. Okay, let's get right into it, everybody. We've got an hour blocked off. We don't need to take that much time. It can take 30 minutes or it can take an hour depending on the questions and stuff, but we'll make sure we're concise and tight with the most broad information for the audience, and then we can go deeper with anybody individually
Yeah.
if they want. So just to start, we're super passionate about home ownership. There's a lot of benefits. The stability ones being that you never get kicked out. You're the landlord, you're the owner. So, if a landlord wants your building and you're renting, there's ways that he can get it. He can take it back. So there's more stability when you own the home. You have to pay to live somewhere, but there's a massive wealth building opportunity with real estate as well. So, real estate, you can make your own, you can make it your home, you have the stability of it, and it's a massive wealth building opportunity in Canada. In fact, the average Canadian homeowner has 28 times the net worth of the average person who rents in Canada. So, it's a massive net worth discrepancy. It's how individuals create a foundation of wealth. It's how families create a foundation of wealth. It's how nations create a foundation of wealth, is through real estate. So we take a lot of pride in helping people do that professionally, and we take it very seriously when the time comes to make a decision. So we want to make sure it's the best decision of our clients' lives, and I'm going to show you a little bit about how we do that. So before we get into that aspect of first time buying, just want to dig a little bit more into the financial benefits of it because there's three main ways that we get to increase our net worth through owning real estate, especially as a primary asset. We're talking to first-time home buyers right now. Um, this will be the fastest vehicle in Canada for a few reasons. The first one is you get the appreciation on the total value of the asset. So you don't have to buy the asset with all of your cash. For example, you can buy $1 million home and you get the appreciation of that million. So the average appreciation rate in Canada over the last 30 years is over 4%. Some areas higher, obviously Toronto, but just at a say on average 5% appreciation rate on average for that $1 million home, you've got about a $50,000 annual appreciation for your primary residence. For that $1 million home, if you put the minimum amount down, we're talking about 75,000 because you need 25,000, you need 5% for the first 500,000, and then you need 10% for the next 500,000. So in Canada, the minimum down payment on $1 million property is $75,000, and your mortgage amount would be $962,000. So at an interest rate of 4.5% with 30 years, your principal in the first year is about $14,000. So in year one of appreciation, you have $50,000. In year one of principal paid, you've got $14,000 less debt. So your increased net worth is about $64,000 in your first year with your original $75,000 down. So after 5 years, the spread increases, obviously. So after 5 years, at a 5% appreciation rate, your $1 million house is worth $1.264 million. It's increased by $264,000. The value of the loan after 5 years is about $884,000. So the spread is $423,000 from what you owe to what your property's worth after 5 years of average appreciation in the real estate market. And that's tax free. So the difference between your down payment, which was 75,000, in Toronto, your land transfer tax is about 25,000. So you're in for $100,000 cash, and you're after those costs, your tax benefit, your tax free earnings on that 100,000 is $324,000. So that's a 324% return on your $100,000 in 5 years, and it's tax free because in Canada, our primary residence on the sale, the proceeds of that are tax free. That is the biggest advantage we have as a Canadian to build wealth. And it's the only tax free, completely tax free vehicle because we have TFSAs, which are taxed before we can invest. So we get taxed on our net income, and then we can purchase TFSA, and then the appreciation of that is not taxed. With an RRSP, you use pre-tax money, but when you withdraw the money, it is taxed. So this is the only vehicle Canadians have to get tax-free gains on their assets. Any questions to start off on that? Because I know I explained a lot of numbers. We're going to send it to you. Anybody who's watching this or is on the call will get a breakdown of what I just said because those were a lot of numbers. But what's going through your guys' heads so far, if anything? Awkward pause for 10 seconds. Anybody? Okay, let's just keep rolling. Let's keep rolling. We have some goals when we're working with people, especially when it's their first time purchase. Such an important decision for the financial reasons, the stability, the making it your own. So we promise when we're working with somebody that it's going to be one of the best decisions and transactions of their life. We're going to make sure that we find the perfect home for the best price possible based on their wants and needs, which is why we need to get to know your goals individually. And I'll show you what we do to find the perfect place for the best price possible. And during this process, you will have clear and constant communication so that you don't feel like you're on your own, so that you don't feel like you can't reach out. There's going to be a lot of unknowns. We're going to help anticipate a lot of those, but anything we don't anticipate, we want to make sure you feel comfortable addressing. Okay, so the next step would be getting to know your goals, and that's where we'd spend most of our time. But first, before we can start shopping, we need to know if we can get a place and where we stand financially for that. So, Steve, do you want to jump in and share what people can expect?
Yes, absolutely. Thank you, Austin. Yeah, I'm going to walk you through this section on securing financing and more specifically what first-time home buyers need to understand to actually put themselves in a strong position when they're ready to buy. So this is where things get real in the home buying process. And if you're not paying cash, and most people aren't, securing financing properly is the most important step before you start making offers. In today's market, having a really strong pre-approval isn't just helpful; it's what makes your offer competitive. So number one, collecting the required documents. This is the first step in getting your documents together. This includes, your income documents, so pay stubs, T4s, or tax returns if you're self-employed, ID, your down payment proof, existing debt. So we go over everything. This is where I want to pause because this is where most first-time home buyers get misled. I find the pre-approval versus real approval, and a lot of clients think that they're pre-approved, but in reality they're not. So a typical bank pre-approval is just some numbers plugged into a system that you tell the bank advisor. There's no real verification, and they'll just spit out a pre-approval for you. But this means that income hasn't fully been reviewed, the down payment hasn't been confirmed, and no lender has actually signed off on the deal. So when you go to make an offer, there's still a ton of risk, even though you have a pre-approval in hand. So how I do it differently than the banks and some of these advisors that you may go to when you go to a bank, when I issue a pre-approval, I treat it like a live deal up front. So there's a lot more due diligence done up front. We collect and review all of your income documents beforehand. We verify your down payment properly, analyze your debt ratios, and match you with the right lender before you go and shop. So when you do go make an offer, we're not just hoping that it gets approved. We're 99.99% confident that it will get approved, and I think that's just a huge advantage, especially in a competitive market. Number two, the reviewing the loan program. So this is where the strategy comes in. Not all mortgages are the same, and as a first-time home buyer, you have access to some great incentives. And I'll just touch on a few of the most important and common ones. So you have access to the RRSP home buyers plan. As a first-time home buyer in Canada, you can use that RRSP home buyers plan to help with your down payment. You are allowed to withdraw up to 35,000 per person, and you have up to 15 years to pay that back tax free. So combined, if you and your partner, that's up to $70,000 tax free that you can withdraw. You have the first the FHSA, and as a first time home buyer, I find this is one of the most powerful tools available right now. So it allows you to contribute up to $8,000 per year, a lifetime of $40,000. And the other big advantage of this, it's tax deductible. So similar to that RSP when you withdraw it, so you don't have to pay tax on that. The other one is the TFSA, and as everybody knows, that's tax-free money. So that's always a great account to use as well for the down payment. So just quickly, you have your FHSA, your RRSP, and your TFSA, three common accounts where the money is tax-free. It's not going to cost you any money to withdraw from those accounts to use towards your down payment. So that leads me to number three, your down payment term and rates. So the down payment, the minimum is 5% up to the first $500,000 purchase price. Anything above 500,000 to a million requires 10% on that amount, on that portion above. So if you're putting less than 20% down, we call that an insured mortgage. And with insured mortgage, the rates are lower than if you put 20% down. And the reason being is there's considered less risky because it's insured by the insurers of Canada. So you have your terms. You have a 1, 2, 3, 4, and 5 year fixed. The most common I'm seeing is the 3 year and the 5 year fixed right now. They are the most popular. You have also access to the variable rates, which is also popular right now. The fixed rate, it's going to give you more stability if you're more conservative, where the variable tends to be more flexible. And I won't get into the nuances of each of these right now, but I'm happy to chat with you offline if you do have any questions about these. And I guess I would just say the decision whether you go fixed or variable should match your comfort level and future plans, not just kind of the headlines, what you're seeing out there. And that's something that we would go through over our first call. And lastly, number four, to obtain a pre-approval amount. So once everything is reviewed, we issue a true pre-approval, and this gives you a clear purchase budget, your estimated payments, and we can hold rates up to 120 days. So if rates do go up, you're protected. If rates go down, of course, we can take advantage of that as well. And most importantly, this just gives you confidence when making an offer, knowing that you are going to get improved. So it gives everybody confidence. One last thing I'll mention, and this is new, some rebates for first time home buyers that sometimes they miss is the HST for new builds. So two separate HST ones. On all new builds, there's HST. As a first time home buyer, you do not have to pay that HST. And there's a new one that the Ontario government just came up with out with, and you can qualify up to $130,000 on new builds. But the time frame applies from April 1st, 2026 to March 31st, 2027. So that may get extended, but for now, we have a year. Um, One last thing too that's important, some closing costs. So there's going to be legal fees. Typically, we budget about 1.5 to 2% of the purchase price. A lot of times it can be less than that, but we just want to make sure that we budget that. So that's going to include your legal fees, so your lawyer, between $2,000 to $3,000, land transfer tax minus your first time home buyer rebate, up to $4,000 unless it's Toronto. You qualify for an additional about $4,500 if it's in Toronto. And then sometimes we'll need an appraisal depending on the lender and how much you put down. That's typically runs between $400 and $600. But with a lot of lenders, they do offer cash incentives, so up to $4,100 in cash, depending on the lender and your situation. So overall, securing financing, it's not just about getting approved. It's about doing the work up front. You want to eliminate all surprises and just putting yourself in the strongest position possible when you're ready to buy. And if you do this step right, everything else in the process just becomes a lot smoother. There is a lot. I mean, I could talk about 45 minutes just on this one slide. And I know I am going through this very quickly. So if you do have any questions or anything, feel free to reach out to me anytime. You have access to me 24/7. I will walk you through the beginning right to the end until you secure financing on your home and it closes, and even afterwards too. You always have access to me. So that's another big, differentiator. If you go and walk in the bank, they have set hours there, so you have access to me 24/7.
Okay.
I think
Sounds
that's
good.
about it. I'll wrap it up there and I'll hand it back to you, Austin.
Yeah, thank you for that. And we'll include the breakdown of like buyer rebates and what first time buyers have options in terms of access to funds and stuff in the notes.
Perfect. Thank you.
Amazing. Anybody want to jump in with questions for Steve before we move along? Any burning questions in the audience? Steve, I think you were just so succinct and clear that people get it, or they'll reach out privately because they don't want to ask in
No,
public, and that's fine.
yeah, there'll be a lot of questions. There always is, especially for first-time home buyers. So feel free to reach out to me anytime. Happy to
Right
chat with you.
on. Once we've figured out that we have financing and how much for, we can start finding the right home. And there's a variety of ways we do that. So everyone has access to actively listed homes and the ones that are available for open houses. We're going to set you up so that you're seeing stuff as it becomes available in real time so that you're the first to know about it. So you don't have to go on your app and try to find it on the map and go through all the ones that you've already seen and that are stale. You can just get the fresh ones that are coming to you in real time. But in addition to that, like Steve said, there's some new construction deals going on. So those are worth considering depending on what your goals are and what you're looking for. But there's a lot of really good rebates. That HST is a lot of money that can pay for half of your down payment back. So stuff worth looking at in there. So we would access all of the off market, on market, depending what area, depending if you're just looking for certain types, certain price points. We can narrow it down based on available and off market new construction opportunities. There's off-market homes. So if we're shopping for resale, before properties go to market, they're thinking about going to market or they're preparing or they never want to go to market. There are houses where people don't want to sign the loan, they don't want to get the house ready, they just want a buyer and an offer. And they can sometimes be willing to take less money because then they don't have to go through the hassle of marketing and selling their house. So, our team has databases of these types of sellers. We target them depending on what streets, what housing types. We target them directly. We reach out to agents in those communities to see if they have things coming up and what's coming up. So there's a variety of ways that me and my team source off-market properties for our buyers. And then some people are already trying to sell them on their own. They do this in a variety of ways. So we look for those in the communities and the housing types that our clients are looking for. And a lot of the time, they're looking for more money than it's worth. So we want to vet those to make sure that they're not overcharging if they are the right fit for our buyers. So that's a quick run through of how we find the right place for our clients. And then the next and most important thing is getting it for the right price. So this is not willy-nilly. This is assessing the overall market. What is the mood of the market? What category are we looking in? What's going on in that? Is it increasing in inventory? Is it decreasing in inventory? What's the list to sales price ratio? Are things selling above asking, below asking, at asking? We need to know that for the category of property that we're looking in the area that we're looking in, because it varies dramatically category to category and area to area, which I'll show you in a minute. Months of inventory is super important. Anything less than 5 months of inventory, meaning if there's 100 homes available in an area and 20 sold in the last 30 days, we know that it's going to take 5 months for those 100 to sell if nothing new comes to market. So that's 5 months of inventory. If there's only 2 months of inventory, that's a really strong seller's market. That means there's only 40 homes available right now and 20 sold in the last 30 days. It's only going to take 2 months for those 40 to sell at that rate. If there's 16 months of inventory, you've got a strong buyer's market. So it's really important to know what kind of market are we operating in for this category in this location. Days on market, that's going to come down to listing. If the average in the area for this housing type is 30 days, this has been on for 45 or 60. That's going to tell us something about their pricing. That's going to tell us something about how they've exposed it, how it's showing. There could be some really good deals in there because a lot of the time it's just because they weren't presented to the market properly. And then we want to do our due diligence. We want to do our analysis. We're going to try to get up to 5 properties that are actively available for sale that are comparable in features and location, and then do adjustments based on lot size, based on house size, based on finishes. We'll do adjustments based on street. Is it north of the tracks, south of the tracks? How does that compare in terms of pricing averages? So we're going to do that analysis with 5 active properties, up to 5 properties that are similar, up to 5 that are pending or never sold, and up to 5 that have sold that are comparable in features and location. And then we negotiate it. We use this data to make a case for our pricing. We get to know what's important to the seller about their sale and if there's anything we can do other than price to make sure that they're getting what they want. We've done things like offered plane tickets. We actually won in a bidding competition and for a good price, not because we had more money, but because we got to know the sellers and we found out that they were going to be moving to BC and we bought them plane tickets along with our offer to beat British Columbia. And that won them over. So we don't know what it's going to take, but we'll get to know it and see what we can do to make sure we get the place for the right price. Any questions about how we find the right home or how we get it for the right price from anybody? Okay, we'll just edit all the awkward silence out of here in the recording that we send out. Sound good, team? Just kidding. We can keep the awkward silence. I'm okay with that. Let's keep going. Now we found the right place. We know we got it for the right price. So we make an offer and then we negotiate those terms and strategy for that. Maybe we go super low and create an anchor price. Maybe we offer right around what we think, but with a precise number. so that it appears that like we're super precise about it and we're stretching as much as we can, but this is the most we can do kind of thing. We want to make sure that we're negotiating the terms, so we might not go in with our best and final, depending if it's competitive or not. But that's a case by case situation. Either way, we want to get to know what they want. We want to make it a win-win so that we can give them what they want while also getting what we want, knowing what that is. Once we get the offer accepted, we come to an agreement. Um, then the loan process starts. Then Steve jumps back in and he's already done the pre-approval and he knows what you can afford and what you can't afford and what your monthlies will look like. Everything's known at this point, but they'll start to legitimize and process the loan and underwrite it. Any inspections, the lenders will want to do their appraisals of the property. Will, in most cases, want a home inspection if they haven't provided for one, just to know what's going on with the house and what things we might want to look out for, if there's anything that needs immediate repair. In this market, depending on the market that we're in and depending on the sellers, a lot of times in right now, the negotiation continues after the inspection. So keep in mind that if something major comes up, especially if you're willing to walk away from the deal because of it, that could be negotiated in terms of price or what they're willing to do to remedy anything that we find in the inspection. So it's kind of a negotiation the whole way through, but once it's firm, that means we've waived conditions, we've submitted our deposit, then everything gets reviewed, the documents get signed. This is a firm binding deal, and it brings it to closing date, at which point we transfer title records, the transaction closes, and that's when you're meeting with the lawyer to sign off on the deed, and you become a homeowner for the first time if you're in this group. And then you get to realize the dream of homeownership. On closing day, you're reviewing the documents. So you'll be signing the documents. You'll have time to review the title report, the loan information, any disclosures, and anything that this is when they would have discovered if there's any title issues to be resolved. Funds get transferred on closing day. So that's when the keys transfer. You get the lockbox information. The seller gets the money in the bank, and you are a homeowner. All of it gets recorded in the municipality. And then you get a congratulations. You're a first time home buyer, and we celebrate. Okay. You get your keys on that date. All of your scheduled move-in has taken place. Transfer of utilities, the forwarded mailing address, meet some neighbors and have a barbecue, maybe bring your agent. All of this stuff we help you take care of, though. You don't have to figure it out. Anybody that you're working with, if they're doing real estate transactions often enough, will have this systematized for you to make it super easy for you. And when you work with us, you don't just work with me, you don't just work with one of our agents. We have a team behind the scenes. Sanya on the call, Kyle, thank you for being here, always supporting the webinars, the clients, the agents on the team. It's felt from our clients, and that's why we're getting so many reviews. Thanks for that, Sanya. But there's a lender involved. We've got Steve on our team. We've got home inspectors. All of the people that you need to make the transaction a reality are already in our network or working with us directly on our team. So you're not alone, and you're not alone with your agent, okay? Even if your agent is away, there's lots of agents on the team that jump in because we are a unit, we are a team. Couple things to be aware of, especially since we're talking to first-time home buyers. We want to make sure that we don't get crazy between pre-approval time, and Steve will go over this, but between pre-approval time, do not make any crazy purchases. Changing job is not ideal because they're going to requalify. They're going to make sure on closing. So between the firm date, which could be 60 days from the closing date, these are the things you don't want to do. Changing your jobs, excessive credit card use. If you omit any liabilities in your loan application and those come up, that could be a problem to close out the loan. Buying a car or any vehicle, you're signing up for more credit. That's affecting your credit. That's affecting how much your loan to living cost ratio is. Any money that you've set aside for closing. A lot of this will be obvious to people, but just as like a disclosure, as a fiduciary duty to our clients, we want to make sure that we've disclosed this and making any large deposits or withdrawals without checking with Steve or your loan officer. changing bank accounts, co-signing for any other loans, stuff like that. We want to keep it clean, keep it the same on a date that goes firm when you're approved for your loan to when the property closes. Okay, disclosed. And our promise to anybody that works with is just making sure that it's an amazing experience. Everyone on our team is focused on understanding your wants and needs. We check in on that along the way. Sometimes we're not finding what we want, the price, the features that we want. So we can open up areas. We can talk about adjusting features, see if we can get more money from family, friends, whatever we need to do to readjust. We're communicating that along the way. Being proactive, it's real estate, so there's going to be surprises sometimes along the way. But you can always count on our team to be professional and deliver expertise along the way. Next steps would be scheduling one-on-one appointments. We'll create a link for that in the follow-up notes, or if you're watching the video, we'll create that on there as well. And if anyone has questions now for the first time in this webinar, now's your last chance. All right. Hi, Danielle. I know you're on pace to do this. So, did this help?
Yes, it did. He's been listening passively in the background here, my first time home buyer live. So it's been
Nice.
helpful. A lot of information, but yeah, yeah. I think also maybe a question that would come up is this first time home buyer rebate for new homes and how, because we're obviously looking at investment properties, but would that be maybe a better decision considering the savings?
It could be. It's definitely worth looking at.
Mm-hmm.
Because I know that you're looking to do it as a primary with
Yes,
income
yeah.
potential.
Yeah, kind of like a house hacking situation, owner occupy it for a year, 2 years, and then move on to the next.
Yeah, Steve might be able to answer that better
Yeah,
and
I was
in
just
one-on-one. Yeah.
yeah, I was just going to jump in there. So with the new HST, a lot of clients, lawyers, realtors, mortgage brokers don't really know what's going on. I've had a lot of questions, and it seems like no one knows what's going on with it. So I just had, just to give you a real life example, we're closing one in the next 2 weeks, and we were able to negotiate. So two things here. That 120,000 HST rebate is
Hmm.
supposed to go into, well, it's a combination. It's supposed to go into your pocket. So there's two things you can do here. With the builder, you can actually negotiate them down and let them know, like, we know that the builders on new builds are getting this rebate, but it's supposed to trickle into your pocket as well. So we were able to save this client up to $60,000 through the lawyers on this new build, where their realtor, and this wasn't part of the Austin Keitner group, just had no idea. It was more me connecting. We have in-house lawyers as well, and putting it in the actual agreement with the lawyers that had to connect with the builders' lawyers as well. So we saved them up to $60,000, where initially we had to scrap the initial deal because it just wasn't in there because no one had any idea. And to be fair, it is fairly new, so people are still kind of trying to figure it out. But all to say, yes, there are huge savings right now with that new HST, and you don't have to be a first-time home buyer for the new builds HST rebate.
Yeah, Danielle,
So,
we can look at your situation, Danielle, because I know that part of the other property had like income, so that was helping pay your monthlies, which you
Hmm.
might not have with a new build unless it's like a duplex. But I think it's under $1 million, I think, and they're condos, Steve, or is that any new
is
build?
um, let me look into that. So, what was this specific property? Was it a new build?
No, it wasn't a new build, but we've been looking at a duplex situation, potentially a triplex, or it's able to convert into a triplex. But for now, it's a duplex, but it's not a new build. So we would have that rental income to offset the mortgage. But
Yes.
now, considering the rebate for new homes. I'm just trying to think of what would be more advantageous in the long run.
Yeah, that's that we need to look at those apples to apples, kind of like it's comparing apples to oranges a bit, but we can break it down by financials and show you what that looks like from like a down payment perspective, monthly carrying cost perspective, and who's carrying the costs on each in each example,
Mm-hmm.
and what that looks like for you from a down payment and from a carrying cost perspective.
Okay,
And
because
then
that
an
would be helpful.
appreciation. Yeah.
Yeah, because I
Appreciation.
think also like even if it's not a duplex, for example, and living in it, if the carrying costs make sense for the time being within this budget, renting it down the line also is doable too, right? So like might have
Yeah,
to play around with some numbers there with you guys.
absolutely.
Super helpful though.
Yeah.
Yeah, let's do that. We can set that up for next week if you want.
Fantastic.
Yeah. All right. Anybody else? Great question, Danielle. Thanks. All right. Well, I'll be available. We'll have our contact info in the notes for this as well. So if anyone just wants to reach out privately, I'll be available. Thanks everyone for jumping on. Thanks everyone for setting it up, facilitating, and helping make it happen. Check you
Thanks,
later.
Austin. Thanks, Steve.
Thanks, Steve.
Thanks, everyone. You're welcome.
Thanks.